Domestic stock market has largely remained bearish this week, attempting to recover losses, majorly due to bargain hunting on Oando, Stanbic and Seplat. Patrick Ejumedia, Head of Research at Sterling Asset Management and Trustees, joins me now for more market movements. Patrick, thank you so much. Pleasure to have you on the show today.
Same here. Good afternoon.
We've seen the market, bearish sentiments, a few pockets of bargain hunting here and there, but just trying to get into the mind of investors, what the investment play has been since the beginning of the month. What can you tell us?
Okay, so basically, since the beginning of the month, what we'll see is that the market has been bearish. Particularly throughout last week, you see this negative growth in the market. Well, like we said, the market surprisingly yesterday came out with about 0.12% growth. That's about 66 point something billion naira increase gain at last week. And of course, the reason why the market has been downward is basically because of the opportunities in the fixed income space. And of course, some industry-specific factors and firm-specific factors. Investors are taking advantage of the high rates in the fixed income space, and that's probably one of the reasons that is driving the market down throughout last week.
Right. Now, for the banking stocks, let's talk about banking stocks, how they performed so far, and also, the rights issues. We know, of course, that recapitalization drive are still on. I know I've gotten a couple of text messages on my phone from, a couple of banks, encouraging or asking or advertising, as it were, some of this either rights issues or IPOs. But talk to us about how investors have been receiving this in terms of, do we know how, I suppose the banks will be in a better position to tell us, but what are you hearing in terms of how successful this bid has been so far, in terms of what the numbers, who's buying what?
So basically, what you will see is that most of the banking sector have been able to, within the stated time that they said they were going to open and sell off their IPOs, and they've been able to meet up with it. But basically, it's not surprising. If you see most of these banking shares month to date, you see that they've been doing well, about 5% growth month to date. And the reason for me is because, if you notice, because of the tax that was levied on the bank, FX trading, the windfall tax that was levied on the bank, so that's a kind of send people away from the banking stock, early. But now, with the release of some of them bringing out their Q2 results, half-year results, the FX trading aspect is now beginning to go out of their their balance sheet as a kind of means of revenue for the banks. So that again is a pointer for many investors to begin to look at that aspect and begin to purchase the banking stock.
Right. We've seen movement recently on, I believe it was yesterday, Oando, Seplat. Talk to us about, what's happening with the oil, the downstream stocks, players in that sector. What are the sentiments of investors? We hear developments within that sector. Yes, we know that there's still challenges with oil production, security in the Niger Delta, etc. But a couple of them appear to be doing well. What is the sentiment?
Of course, we know that since the removal of fuel subsidy, most of the market has now been deregulated, so to say. And of course, you see what's happening now. People are queuing up, oil prices are going up. Compared to, if you check the latest data by the Nigeria Bureau of Statistics or National Bureau of Statistics, you'll see that oil prices month on month went up by about 2% in July, compared to AGO that came down by about 5%. So of course, this increase in prices is a pointer for many investors to begin to look into the company shares and begin to purchase their price. So this might be the reason why their stock is currently driving the market month to date and year to date.
Right. How do investors, equity investors, how do they feel about the economy right now? I know that we're still tracking, key indicators, especially inflation. We saw it at the last print. There was a slight slowdown, and projection forecast is that going forward, like we were discussing earlier, because of the season we're going into, we should expect further trend downwards. How does that impact on how investors perceive some of the stocks, especially in the consumer goods sector?
Okay, so what we are seeing now is the fact that before now, like I've said earlier, the rates, the opportunities in the physical space have made a lot of investors move towards that space. But if you look at what is happening now, the savings bond that came out about 2 months ago, a month ago, you see that 2-year bond went up, 3-year bond also went up. If you also look at the 9-year bond, it also went up. Now, what that means, and if you look at the 1-year treasury bill, it came down to about 21% from 22% that it was. Now, the reason why that is going to be happening is because government may be looking, from my perspective, maybe looking at the fact that the short-term bond gets matured on time and government need to pay on time, and that can fuel inflation, and that can also drive private sector, private investment because of the crowding out effect. So pushing this into long-term with the expectation that in the long-term the economy will do well, government will be able to raise sufficient revenue and be able to pay back the debt that they are owing. Now, coming to the market, what we will see is that for now, because inflation is coming down, we expect that to continue to go down because of certain reasons that we have said. We are entering the harvest period, and that's going to go into cost of production.
But would it be a significant slowdown? Because that's another conversation.
Yeah,
that's
yeah,
another aspect of it.
Yeah. Yes, of course. But the first is that once it is going down, cost of production will go down. And if cost of production go down, again, because inflation is also going down, purchasing power will also go up. So demand for these companies' products will go up. And we expect that maybe in Q3, or probably end of the year, when they begin to bring out their Q3 or full year results, we begin to see some kind of increased performance of these companies. And because we expect that government bond, long-term bond will be going up, and the short-term instruments might come down marginally from what it is now, we might see some activities in the equity market.
Right, and for the brewery guys, they're still within the consumer goods. How are those stocks faring right now? I know that obviously in the last 1 year has been challenging with consumer pocket, but I mean, for the brewery guys, I mean, I always remember that famous saying, when people are happy they drink, when people are sad they drink. Is that still the case?
Yeah, it's still the case, but again, that's not to do with the quantity and the amount of purchasing power. Don't forget that inflation don't just affect the industry, it also affects the purchasing power of the consumers. And don't forget again, the economy, since COVID, we've not been able to get that level of growth that we've had before COVID. So these are activities that are slowing down demand for these guys, the brewery guys that we have talked about. And if this continues to happen, if inflation comes down now, purchasing power will go up, and we expect that by the time our GDP data comes up, maybe sometimes ending of this month or early next month, we might see some level of growth. And these are activities that will now begin to push these companies up, particularly inflation. Again, the fact that government is at the moment trying to stabilize the exchange rate, even though it is still very high. So these are factors that might affect production, cost, and all that. So if we get exchange rate right a bit stable now, and we get inflation going down, we might see some level of increased performance in these firms.
Right. And finally, I mean, at just 28% year-to-date return the market. I mean, we coming from the beginning of this year was a little higher. But where do you see the market ending this year? Do you see the market touching 30% again?
Year-to-date. Yeah, for me, I would say yes. A yes because of some of the reasons I've said earlier. Now, as third quarter result begins to come out, people begin to take positions strategically for dividend payment and capital gains, end of the year and all that. Then again, the fact that the banking stocks now, what we will see, because FX windfall gains is not going to be giving a signal for investors, those banks will not be making so much money from the windfall gains anymore. That's FX trading. Right. So that might push people to begin to buy stock, and we'll see increased performance. The banking stock begin to drive the market up again. And again, because of the fact that the opportunities in the fixed income space, the price might go down a bit. That is, the interest rates in the fixed income space might go down marginally, which also puts investors again to the equity market. All of these will play a role in making sure that the market comes up a bit, maybe to 30 towards the end of the year.
Right. I mean, so many moving parts. Well, thank you, Patrick, for sharing that perspective with us. Yeah. Appreciate the time on the show. Patrick, Ejumedia, Head of Research at Sterling Asset Management and Trustees, taking us through developments at the stock market here in Lagos.